income statement, sales, but those who are not written, those who are not sold, who are not sold, it means that's still under company possession. It has some economic resource, economic value, so that is current asset. Okay. Now, prepaid expenses. Now here we go. We have a trick here. Prepaid expenses. We know that expense is not a part of balance sheet. We are discussing balance sheet here, right? But we are also discussing expenses. So remember, this is prepaid expenses. Expense didn't happen, but we pay in advance. For example, advance salary. Normally what we do, an employee work for us. After that, we pay the salary. Or in case of rent, you pay advance rent, right? If you are in Shanghai, you pay advance 3 months rent, but you only lived for 1 month, right? 2 months you still didn't live there, but you paid in advance. So that is your asset. It means expense didn't happen, but you paid in advance. Advance salaries, right? You pay a worker for example, you have a sanitary worker who is cleaning, or janitor who is cleaning, but he is demanding advance money. You pay, but he didn't deliver the service. Expense didn't happen, but you paid in advance. So this is called prepaid expense. So remember, prepaid expense is our current asset. So don't don't pay close attention to the word expense, because expense belongs to income statement. So only one thing that causes this expense to be written in current assets, because of its nature, and its nature is prepaid, right? You pay advance taxes. Advance taxes means prepaid taxes. That it means that are your asset. You still didn't earn that much money, so that the tax is going to pay it. You paid in advance. Advance salaries, prepaid rent, prepaid salaries, prepaid rent, right? So these are our prepaid insurances, prepaid advertisement, prepaid supplies, right? Any question? Let's move on. Long-term assets or fixed assets, whose of course benefit is more than 1 year or more than accounting period. So long-term assets, we have tangible assets, we have intangible assets. And tangible assets, we have plant, property, equipment. Property, like building, like land, equipment, like AC, like water cooler, like laptops, like furnitures, right? These are equipments. Xerox machine, right? Your mobile phones that you paid for work to the employees or CEOs whatsoever. These are tangible, right? And then accumulated depreciation. If you don't understand the concept right now here, don't worry about that. We have a separate chapter on that one, right? So accumulated depreciation is how much you use that asset. For example, this laptop is for $3,000. You use it for 1 year. Nothing happened. It's complete branded new. Or even you didn't use that. You keep it with yourself for 1 year. If you want to sell it again, no buyer will buy it on its original price. He will say that, listen, whether you use it or not, it is with you for 1 year. I assume that you have used that. Loss in the value of its, in equipment assets due to its usage or maintenance whatsoever, we call this depreciation. And depreciation is non-cash expense. You don't pay cash in, from your pocket, right? So wear and tear of asset is called depreciation, but that doesn't mean that is actual wear and tear. It is just on a number game, that's it. Right? If you don't understand that one, please don't worry about that. We have a separate new chapter, whole chapter over there. So we'll discuss over there. Long-term investments, like I told you, if you have bought company stock for more than 1 year, then we call this is long-term investment. Intangible assets, which we cannot touch. All those long-term assets whose life is for more than 1 year, and we cannot see that, which means these are in the form of papers, like patents, goodwill, trademarks, Coca-Cola name. You have heard that Coca-Cola name brand worth is more than $50 billion. Can you touch the brand name? No. Can you touch the patents? Can you touch the copyrights? It's just a paper on the paper, that's it. But these are your assets, yes, because you can reap out the benefit for more than 1 year. We call this intangible assets. Intangible long-term assets. Right? Yes, Ella, you look confused. Any question?
I was writing includes and I cannot see it now. I mean, yeah.
So for intangibles, these are, I think there's animation error here. These are intangible. Intangibles. Here we go. This is our asset sides in real life, how the asset side. So that's why the word partial here. This is not a complete balance sheet. This is just the asset side of the real company, which is Gap Incorporation, the asset side. Why the word is consolidated? Because we are seeing 2 years combined balance sheet. So you see current assets, cash equivalents, short-term investment, inventory, other current assets, so we have a total assets. Long-term assets, plant, property, equipment, other long-term assets. See? So this is total assets. How we write it down, the categories of balance sheet. And did you notice something? That current assets are written first and then long-term assets are written. Is there any order here? We just talk about the word liquidity, right? Means we have to write down which assets first, who is the most liquid. First of all, we write down current assets, and then under current assets, we need to write down first the most liquid asset, cash and cash equivalents. And then next liquid asset, short-term investment, next liquid asset, inventory, next liquid asset. It's like that, right? And then we have to write down plant, property, and equipment. So under plant, property, under long-term assets, plant, property, equipment are more liquid than the other long-term assets. We do have other long-term assets, goodwill, trademarks, and all this stuff. But this is a real-life example of Gap Incorporation, right, guys? Here we go. Current liabilities. So we are now under liability side of the balance sheet. Liability side of the balance sheet. First of all, we need to write down the current liability. It's the same definition. Only one thing, we are just talking about liability here. So liability means outsider's claim. So business has to satisfy or had to pay back outsider claim and whose life is less than or equal to 1 year. It means it is under current liability. All that debt that belongs to outsider that we have to pay within next year or up to next year, that's it, or within the financial cycle or accounting cycle or operating cycle. So which includes accounts payable. Now we have seen under current assets account receivable, and we talked about that. Business has to receive money from customers, right? So similarly, business has to pay money to suppliers, from those people from which business purchase raw material. If Gap Incorporation is in clothing business, he need to pay the raw clothing, right? Cloths and all the stuff. And then they cut it and stitch it. That is a business operation. So suppliers are those who provide raw clothing. So we will be writing down under accounts payable. Income tax payable, okay. Amounts owed to vendors and suppliers for purchase of inventory, right? Income tax payable, you earn money, you earn net income, taxes are 30%. So did you submit the tax on the same day? No, government had some dates. You have to submit the tax every 3 months, and you will submit the income tax after 3 months, right? So during this 3 months period, that money belongs to you, belongs to government. So that is payable, outsider's claim. If it's prepaid, you prepay in advance next 3 months taxes, then that is your asset. Prepaid is your asset, right, guys? So that is just a small trick here. Accrued expenses, what does it mean? This is the opposite of prepaid. Expense happened but you didn't pay. In prepaid, expense didn't happen and you pay in advance. But in accrued expenses, look at the word accrued, occurred. Expense occurred but you didn't pay. Like salaries, employee worked for you for the whole month and then after you pay. But if you have the policy that you will pay your employee the month's salary on every 15th of the next month. So 15 days, you are taking cushion, you are not paying. So in those 15 days, salary is payable. Accrued expenses. Expense occurred, but you didn't pay yet. You will pay later. Similarly, utilities. Electricity bill. You consume the electricity and after that you will pay. Right? Expense occurred for a month and then you will pay. You will be given some days and you will pay. So that is, if you didn't pay yet, your outsider premium. Current maturities of long-term debt. If you ask a loan for long-term, you said, okay, I ask loan for $1 million and I will be paying you every year 100,000 for 10 years. So this year I have to pay 100,000 among 1 million from total debt. So total debt is long-term. So this that is due this year, this is our current liability. We will be paying it within 12 months. We call this current maturities of long-term debt. Right, guys? Now, long-term liabilities whose life is for more than the accounting cycle or more than 12 months, which includes bonds payable and long-term notes payable. Bank loans for more than 1 year, long-term loans. If you ask supplier, okay, I am buying you in bulk, but I will pay you next year, then you issue a long-term notes payable. You record it under long-term notes payable. You write it down on business head or on a contract that I will pay you later with some interest as well. So this is just agreement nature. Bonds payable, you ask loan from the public and you say that we will be paying you interest during the year, and after some time we will be paying you your principal after 5 years or 10 years whatsoever.